Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. All that lies ahead for stocks as a historically tough month is about to begin. We'll discuss the road ahead for the markets, the AI trade, and much more with the investment committee. Joining me for the hour, Stephanie Link, Jim Leventhal, Amy Raskin, Jason Snipe. Let's go to the markets, show you the picture today. We do have some red across the board. You know what happened by now with the PCE report, which we're going to get to. But we do wrap up this week, I think, with new questions about the state of the AI trade. Following the Wall Street Journal reporting today, Alibaba has a new chip to fill the Nvidia void in China. You had, obviously, Nvidia not trading well since its earnings. Other chips are down today. Broadcom reports next week. Micron's down. AMD is down. The SMH is having its worst day since April. Stephanie Link. Where does that leave us?
I mean, these stocks have had such a nice run. I was just looking at Broadcom in the past year, up 84%. I mean, that's a huge, huge number. It's re-rated. The whole group has re-rated. Are there question marks about maybe the growth isn't as fast as we have been seeing over the last several years? Of course. But there's a couple of stats we got from Nvidia, and I don't own Nvidia, but we all pay attention to it. Long term, they see $3 to $4 trillion in capex and data center spend between now and 2030. And they did not change that. That they reiterated yesterday. That means your CAGR long term is 40 to 45%. That's still very, very healthy growth. Short term, the data center numbers still growing 17% sequentially from the past quarter that they just reported to next quarter. That's over $7 billion of revenue without China.
I know. Let me stop you 1 second.
No.
Let me stop you 1 second. Let me stop you just 1 second.
I'm just telling you that.
I know. I got you. You asked a question. Is growth not what it was? Of course. So then why wouldn't you say, of course, to the question of, well, then why do the stocks deserve to trade at what they're trading at? Why does the stock appreciation justify itself if the growth rates are going to slow in critical areas like they are for Nvidia with data center? I know the numbers are still extraordinary.
They are.
However, if you're telling me that the growth is not what it was, why should everything else be like it is?
Well, you're talking about Nvidia trading at 25 times forward estimates, and they just told us that the industry is going to have a CAGR of 40 to 45%, and they're the number one player in the industry. Same deal, by the way, with Broadcom. They've got custom ASIC customers that are going to grow 60% year over year. The growth numbers are still very, very large.
Are you worried now about Broadcom for next week? The stock's down almost 5% today. Why is Broadcom going to have a better reaction following its earnings than Nvidia has?
Okay, because the reason why I own Broadcom over Nvidia, and that is because of the diversified total revenue mix. So 31% comes from data center AI. 41% comes from software, and that's VMware, and that's recurring revenue, and that's higher margin business. And then the rest is kind of the cyclical troughing business, like the enterprise networking stuff that Marvell, by the way, told us yesterday is bottoming. So I like the diversification. I like the inference in terms of expectations. If you have inference and you have large language models, and that's increasing, and you need inference for that, that actually means you need more custom ASIC chips.
Isn't Marvell down a bunch today?
That's because they lowered guidance. I don't think that Broadcom's going to lower guidance by any stretch. And they also, by the way, have the industry-leading gross margins, operating margins, and free cash flow. So my point being is you're asking about the broader SMH. I think you have winners and you have losers. But if I had any lack of conviction or less conviction in the spending environment, that's when I would have a problem. I'm not concerned about the absolute growth numbers. I'm concerned more about if that spend slows and you don't think $3 to $4 trillion by 2030. That's crazy. That's way more than anybody was expecting. I mean, I was thinking $1 trillion. That's a lot too.
Okay.
But 3 to 4 is big.
Amy Raskin, how do you see it after the week in which we had Nvidia numbers? The stock ran up a ton into the print. Stock hasn't traded well out of the print. They maybe with their earnings report raised more questions than they have before. Data center growth. What's the real business in China going to look like, et cetera?
It's sort of interesting because we do own Nvidia and we've owned it for over 10 years now, and it's literally like a 30,000% increase. But I'm going to take sort of the opposite side of Stephanie. I think that 3 to 4 trillion number is crazy. I don't think that we're going to get there. I don't think you can get there and earn a return on those numbers. And at some point, that's going to matter. So we own it. We're underweight. We have huge gains in it that we've trimmed. We keep trimming. It keeps coming back up. But I do think it's not going to happen anytime soon. As long as there are shortages, ironically, that sort of makes people buy more because they're trying to keep the chips out of other people's hands and get as much as they can. So I do think you're having a big pull forward. I think that's going to continue, which is why we haven't sold it outright, and we're still in the stock. So I think you still have a while there. But I do think at some point, these inflated expectations are going to come home to roost, and you're going to see another big pullback in the stock.
I mean, you do have a highly concentrated customer base. We know that. CNBC yesterday, Nvidia's top 2 mystery customers made up 39% of Q2 revenue. Customer A made up 23, customer B 16. That's higher than the same quarter a year ago when Nvidia's top 2 customers made up 14 and 11% of sales, respectively, according to their own filing. We asked Altimeter's Brad Gerstner this very question yesterday when he joined us. He said, not a big deal. Listen.
It's kind of like saying the United States exports are dependent upon Europe, India, and Southeast Asia, right? The fact of the matter is these companies are as big as countries. They are the biggest buyers in the world. They're the only ones with the balance sheet and the free cash flow that can scale up compute at this level, at this scale. It's a huge national advantage. I don't view that as a problem. In fact, I view that as an asset.
What do you say to that? It kind of responds to a little bit of what you're saying.
Well, that's not. My issue isn't the customer concentration. My issue is whether those customers are going to be able to charge for their AI and get returns on it. And I think expectations for AI have gotten ahead of themselves. You saw the MIT report that said 95% of customers using AI don't see a return on it. I think it will come, but I think it will come over a longer period of time between now and 2030.
But that's why I own Broadcom, because it's not just AI and data center, like we just talked about. Right?
I know, but don't you think it's being valued on AI and data center more than anything else? I mean, come on.
I think certainly it is re-rated, no question. But I think the margins are sustainable because of the software business. That's when it started to re-rate, when they bought VMware.
The expectations aren't quite as high for
They're
Broadcom.
Not nearly as high. And maybe they don't get to 3 to 4 trillion. Maybe they don't get to 3 to 4 trillion by 2030. But even if they got to $1 trillion, that is enormous. And you want to own the best 2 companies, and that is Broadcom, and that is Nvidia.
Let's look at 3 months,
not even
year to date. You don't think that expectations have gone higher as the stock has done what it's done over the last 3 months?
Expectations have come certainly higher, but it's not the bellwether name. I do think the diversification helps. It's $1 trillion market cap versus a $4 trillion market cap. So I think that sort of tells you a little bit about.
Mr. Snipe, what do we do?
Yeah, listen, I hear both of the points, and I can appreciate both of them. I think for me, as it relates, whether the CapEx number is $1 trillion or 3 or 4, it doesn't matter. What I could say is the guidance is very strong, and obviously the AI theme is not moving anywhere, right? So as I look at the
guidance is based on expectations.
Yes,
right?
Absolutely.
No, I know, but not all I have expectations. My football team's going to do great this year.
Yeah.
Well, what if they don't?
There.
That's not a guarantee.
No,
it sure looks good on paper.
It's not. But what I will say is, even when we think about the concentrated return, we're talking about the greatest companies in the world that are spending money with Nvidia, right? Now, if we go back a few months ago when all the announcements about the Middle East and the investment there and in the EU and sovereign and enterprise, there is opportunities elsewhere outside of the hyperscalers. So I don't think this theme is slowing down anytime soon. Yes, there has been some digestion. A lot of these companies have run a lot into these prints and through this whole year. But I don't
not lately. I mean, lately, a lot of these stocks haven't done well. Nvidia, Amazon, Meta, Microsoft, month to date, as we're about to wrap, are all negative.
And for me, I think it's just a season of digestion. We talk about this all the time. The stocks run up a lot into the print, then there's a little bit of digestion post-print, and then they really accelerate when we see something else. So I think that's where we are right now.
Farmer Jim.
Your
You
Honor.
heard everybody. I've given you the opportunity to speak. My gavel's ready, but go ahead.
All right. Well, I'm going to take it maybe slightly different direction. I don't have a strong opinion on whether you're right, Amy, or whether you're right, Stephanie, on the growth rate. What I would say is that a forward multiple on Nvidia of high mid-20s gives a margin of safety, if you want, as far as the PEG ratio goes, to me anyway.
$100 this quarter.
Let me make the bigger point that I want to make here is what we do is both science and art. The science is the PEG ratio. The art is looking at the markets, looking at sentiment, looking at what you just said, Scott, about where some of these stocks have traded, which is to say down, and doing what I've been doing this month, the last few weeks, which is trimming and raising cash. Now, I'm not very comfortable doing it, and this is the science of what is the market saying in terms of sentiment. As we enter September, a notoriously tricky month, as I look at my portfolio, I see a lot of stocks that have been trading above where I think fair valuation is. I've been trimming them, and what you've been noticing, Scott, and everybody watching, is I haven't put money to work. Haven't put it back to work for several weeks. I think September, this is the art. This is the art. Scared to death. Nothing scares me. I'm a former nuclear submariner, Mike.
There you go.
Your Honor. Steely-eyed killer of the deep.
All right, that's fair.
What I see is opportunity. It's coming. What you just said, and I loved it, the 95%, the MIT study of these companies that have not yet reached a gain from AI, that is opportunity. I see that ready to grow. And I see the sentiment starting to roll over in the stock market, and that's going to be opportunity to put money back to work in the next couple of weeks.
Speaking of the, not euphoria, it's not, I don't think, reached that level, but like Jensen Huang talks about selling Blackwell to China, the market gets all excited about it. It's like, oh, we think it could happen. We think it could happen. I don't know, not so fast. What makes you think that all of a sudden they're going to be able to sell their best chip, their highest performing chip, in China?
And China's going to let that happen.
Well, not on both sides.
Right.
That the China will take it. Now you have the Alibaba news today, which sort of is why Nvidia is down the way it is, but also that it's not going to come at a cost.
Well, what
the
if
cost
they got
of what they'll have to
Hopper?
pay to the government? Are they going to want that? They're going to want these older generation chips, or are they going to be able to make their own from the Alibabas of the world? I asked Stacy Rasgon, he's like the top chip analyst in the space, about that issue. Are they going to be able to sell it in China? Here's what he said.
Where I keep coming back to is I'm very confident that there is demand for these parts in China, whether they're Hopper or whether they're Blackwell. I just don't think there is enough local capacity of locally sourced parts to support the local demand for AI. I think the customers want NVIDIA's parts. We'll see if NVIDIA is allowed to sell them or not, but I think the demand is there.
Nobody knows. That's the bottom line from somebody who thinks about it more than anybody, arguably. Guy trying to model out what potential sales could look like in China if they're able to do it, minus whatever sort of payment they would have to make for a licensing through the government to do it.
So the guidance is what it is without China, and there's expectations that maybe if they have China, it's $2 billion, $2.5 billion. I don't know. The bigger question to me is it a Hopper chip or a Blackwell chip? Because that actually has implications for margins. And so it's not a demand problem. It's going to be what does both governments allow to happen, and then what are the implications in terms of what they can actually sell? Which one of these chips can they sell? I would highly doubt it's Blackwell, to be honest with you. But if it's Hopper, that's okay too, because they're still going to get the revenue side of it, and they'll make up the margin side on the Blackwell around the rest of the world, in my mind.
What about all the hype around the power players, if you will? Because they haven't had a great month. Vertiv's down 12, Constellation down almost that same amount, Vistra's down 10%. These are all percentages. Eaton's down 9.5%, and GE Vernova's down 7.5%. You want to talk about where there's been a lot of hype? Look here, almost over everything else, don't you think?
I don't think it's hype at all. I mean, you don't have the infrastructure. And part of NVIDIA's CEO commentary about the total addressable market of CapEx and AI and data center spend of $3 to $4 trillion has to do with also these guys, the infrastructure players, which I still believe are absolutely a buy. You buy them on weakness. I've been buying them all year on any weakness, but they do trade, Scott, to your point, on the data center AI trade, if you will, right? So today is a bad day.
Hasn't that fact pushed their valuations higher than what they historically trade for as like utility or power companies?
Yeah, because you have utility and power companies double, triple the size of what they're spending. And we don't have enough data centers, guys. I'm sorry, we just don't. So we have 11,400 data centers in the world. It's estimated you have to get that to 30,000. You need a grid. We talk about the grid all the time. This is right up Quanta Services' alley. They have 75% of their customers are utility companies who are tripling the spend. So there are all kinds of ways to play it. And oh, by the way, we are still very short power, and we're still going to need it. Even if you don't believe my numbers at 30,000 over the next 5-10 years, even if you get to half of that, you still don't have enough power even today.
These stocks overhyped or what?
So I think, let me say this. I think that we recently bought Eaton, right? You know, in the last couple of weeks.
That's why I came to you.
Yes, and we've been watching it for a while. And it's been running significantly. It's up around 17% in the last year, but only up around 5% year to date. So we took advantage of some of the price pullback over the last 2 weeks. Now, what I will say about their business, aerospace backlog up 16%, electrical backlog up 15%. Yes, it is a data center play. The report was good. EPS was up 8%, revenue was up 11%. But I think going forward, to your point, Steph, on where the CapEx is and what the power that is necessary and needed to power these data centers and all that goes into the grid, I think that you cannot avoid these names. And I think they're kind of being played into all that's going on with this trade right now in terms of some of the digestion and pullback that I mentioned earlier, and I think that's part of the price
action. Eaton has said there's $2.4 trillion of mega projects. You know this,
yes.
Right? $2.4 trillion of mega projects in the pipeline. Only 17% have been started. So again, haircut that number in half or by a third or whatever you want to do. It's still, the bottom line is the visibility is still very strong in the near term.
Do we learn better things about software since we talked about chips? Did we learn better things about that trade this week? I mean, if you look at Mongo, you're like, yeah, I feel pretty good if I own that stock. Best week ever. They had upbeat guidance as well. Stock's given a little bit back, but there's your week chart, says kind of everything. Snowflake's best week since November. They beat, guidance was good. Amy, how about that? Your target today goes to 275 from 250 on Snow. It's a buy reiterated at Citi today. Feel better about these trades coming out of the week than we did going in?
Definitely, yeah. Snowflake had a great quarter. We own it. You saw that reacceleration in growth. Look, it's still a very expensive stock, but at $66 billion market cap versus some of the other options that we have in the space, I'll take it. And I do think for AI to even happen, you need the data organization, which is Snowflake.
Jace, you own it too?
Yeah, and I think it's all about data warehousing. The big one for me is operating margins were up 11%. The street was looking at 8%. That is a big win there for them in terms of monitoring down their expenses and growing the revenue. These are the types of stocks you want to buy in this cycle.
Well, you have been buying more of this one, right?
Yeah, total product revenue growth of 32%, accelerated 4 points. And to Jason's point, I mean, their margins up 610 basis points year over year. Most people were thinking about 400 or so. I mean, 400 would have been fun to have, right? Now you got 600 and what did I say? 610 basis points. So they have the products. That's the whole thing. This new CEO, who's not even new anymore, he's been there a year, but he actually has focused on new products, and that is absolutely doing very well, and that's why they're gaining share.
Okay, so we know that the software trade's been questioned, and for good reason, really. If you look at the 1 month performance of some of the names, like right in the heart of the space, C3 AI trade down 30% in a month. Fortinet's 25. Oracle's down 10. Datadog down 8.5. ServiceNow's down 8. Jim's Adobe is down 4. Target today gets cut to 400 from 430. I'll ask the question on the desk. Raise your hand if you used to own Salesforce. Raise your hand. How many hands go up?
Yeah, but 3 years ago.
No, keep the hands up. Yeah. Don't be all shy. We're not playing that game. Keep your hands high.
There was up. Right? You got it.
A long time ago. Yeah.
Warner Wolf, let's go to the videotape.
It reports next week, the worst year since 22. Yeah. Why don't you own it anymore?
Well, I sold it on valuation about 3 years ago, but why don't we extend this because it's in the same category as Adobe, which I own now.
No. I don't want to talk about Adobe again. I want you to tell me straight up why you don't own this stock anymore.
Because I own Adobe instead. I've made a choice within the software space.
That's a great exchange.
I've made a choice within the software space. I don't know. There's 5,000 stocks in the stock exchange, Scott. I don't own them all. I own about 25. I own Adobe. I don't have I'm neutral on Salesforce, but the question for Salesforce is the same one as Adobe, which is these stocks are guilty until proven innocent. Bottom line. Now, Snowflake.
You sound like a Cowboys fan today, trying to be happy with a couple of first-round picks rather than the best defensive player in football under the belt.
Snowflake did well.
We got a couple of picks back. That could be great.
Snowflake did well because it reported earnings. Same with MongoDB, reported earnings. Yeah. The question is answered. We need the question answered for Salesforce next week with earnings. Same with Adobe, and I think it's the week after next. Not quite sure they've announced, but these stocks are guilty until proven innocent, and the proof comes in the form of earnings reports.
It's honestly a name that we're looking at, as long with ServiceNow.
CRM?
We're looking at it. We haven't finished the work, but it's come down enough that it's worth looking at.
We asked Brad Gerstner, too, about the idea of the software trade being dead. I want you to listen to what he told us yesterday, because it's right in the heart of the argument.
Is software dead? That's what everybody was saying. And so all these companies were pretty bombed out. I think what this quarter, when we look back at it, it will mark the turning point of the AI winners in software.
Okay, the turning point of the AI winners may be the underscoring of the AI losers in some respects, too. That's kind of the conversation we're having. There's a bifurcation going on here.
Yeah.
And it's winners versus losers. And, some are trying to hang on to the perceived losers and think that they're going to have their day. I'm not going to mention any names of those. Some, Jim.
Hey, look, if it does not perform well after earnings, it being Adobe, I'm done. This is not going to be a battleground stock for me. I'm glad it's fun. We've made it a battleground stock the last 2 weeks, but this is not going to be something that I'm going home at night worrying about. If it doesn't perform after the last earnings, I'm done with it.
I've always had a hard time owning any stock where they're seeing revenues decelerate and the valuations staying where they are. Like a Salesforce is the perfect example. 24 times for single-digit revenue growth. That to me is not exciting. But that's one of the reasons why Snowflake had its struggles a year and a half ago, because they couldn't deliver. Revenues were decelerating. That's why new product introductions are so incredibly important, and it's the power of that in addition to margins. And when you have that combination, you get massive operating leverage, which we saw this week. I just don't think some of these older traditional software companies are going to see that massive operating leverage.
And here's my point. You may be right, and if you're right, I'll come on with you and say I'm selling the stock.
Look, I hope I'm wrong.
No, it's okay. Look, what I'm looking at is a software stock that I still believe is relevant. I may be wrong. I see mid-teens earnings growth projected. I see a stock that's trading at a mid-teens multiple, i.e. the PEG ratio. You know where I live, Amy, is 1. And finally, stock buys back shares, or the company buys back shares at such a meaningful pace for a software company that they're shrinking the share count.
Okay.
That matters.
So lastly, we're going to embark on this new month of a Fed meeting, obviously, where the market has big expectations of rate cuts coming. I know there's a debate that core PCE obviously showed that it rose in July. Waller says, let's get on with it, cutting rates. Don't wait. You risk more by waiting than you do with cutting. Morgan Stanley says a Fed that cuts earlier may have to cut less. We know who wants the Fed to cut. That's the president. We got a lot of reports. We heard from a lot of the discount retailers. You have a new buy on a stock that's having its best month since November. It's up 12% month to date, and it is
Deckers. I've never owned it before, actually, Scott.
Well, why not?
Why now? It's because they have very strong brands. I'm a big believer in Hoka myself personally, but the numbers speak for themselves. It's growing Hoka about 20%, and they're guiding double-digit growth for the rest of the year for Hoka. UGG actually saw a massive snapback of 19% growth last quarter versus 3% the prior quarter. So they're seeing brand momentum. That's what I like to see in retail. They have great global opportunities to gain market share. International last quarter grew 50%. I think they're just at the tip of the iceberg in terms of international momentum. DTC, they have opportunities as well. And we are hearing, we've been talking about the China consumer. We are hearing that China is seeing a little bit of an improvement. 8% of Hoka's revenues have come from China. And they also talked about how the July and early August trends were off to a good start, beating expectations. So stocks trades at 17 times forward estimates, still down 41% on the year, down 25% in the past year. I think there's a catch-up trade to be had here.
Well, UBS agrees with you because UBS today is bullish as well, and they say this stock is a significantly underappreciated growth stock, and that they see a, quote, very good opportunity to buy shares in a growth company currently significantly undervalued by the market. Certainly, tariffs could drive a macro slowdown, which disrupts the second half of next year. However, we view these as minor risks, which don't dull our enthusiasm for the big picture story. Any other takers? Deckers?
Quite a chart, though.
Crickets?
Yeah, no, that's quite a chart, though. It looks like it is bottoming and turning.
And there are only 14 buys out there from the sell side and 15 holds and sells, and you know that's right up my alley. I love
It's up
that.
9% this week.
Yeah.
What's up with Gap? How about the price action? Can we look at Gap after they missed their comps? Tariffs are going to hurt profits. They maintain their full year growth guide. Maybe that's why this chart that we're going to show you looks the way it does. So goes down, then comes back, and now it's up 2.5%. You own the stock. What's up with the price action? What does that tell you?
Because the headline comp miss is disappointing, but it was all Athleta. It was down 9%, and that was actually pretty much known. They have a new manager, actually, at Athleta intra-quarter, so they need to fix that. Athleisure overall is really struggling. It's not just Athleta. But in the meantime, 70% of their revenues come from Old Navy and Gap, the brands, and they're seeing nice comps. 2% at Old Navy, 4% at Gap, 4% at Banana. That was a big surprise. Now, the disappointment is tariffs and what it means to margins. I was thinking you can see operating margins by the end of this year at 10%. That's off the table because of tariffs. But 6.5%, 7% is still an improvement, and I think we will get through tariffs. The big deal in my mind is they have the products that they want. Richard Dixon is doing an amazing job with his new management team, and the stock is still trading at about 10 times forward estimates. So I think you have to be patient, though, for the operating leverage story to really pan out. But I do like the fact that the top line in same-store sales is beating.
All right, we're back. I told you Jim Leventhal has a move. So repeatedly, love this stock. I mean, people are going to Vegas or Macau, wherever the heck they need to go to gamble at Win. And the stock's finally turned around after being a little bit of an underperformer. Now all's well, and now you trim it.
I swear, I have to tape this episode and send it out as a Christmas card. This is a good trim, Scott. This is a good trim. The stock's up 70% in a year. It's up 40% over the last 3 months. If you want to buy low, you have to sell high. I'm trimming it here. Specifically, though, I'm starting to see the 2027 estimates start to go higher meaningfully. And what that tells me is that what I've been saying for quite some time, that the Dubai new resort, the Al Marjan resort, is now finally starting to be priced into estimates. I have done, in my defense, Your Honor, I've done a very good job of staying out of the way of this thing. Okay, well,
I'm just kidding.
I've done a good job of staying out of the way of this. It's up 16% in a month, for crying out loud. Finally, it started to show some weakness today, and I just decided to trim it, actually cutting it about in half.
Oh, wow, okay.
Yeah, so I am retaining a position. I know you hate it, Your Honor. When I do that, I'm selling it, but I still hold it. But look, the sale is what it is. I'd love it if we get a pullback, and I add that right back into it. I do still think it's a good stock for the long run, but I think in terms of share price, it's ahead of itself right here.
Some final trades on our desk right now. The sniper is first.
I like ServiceNow here. These new agentic AI tools are boosting average selling prices. Stocks up 14%. Here's an opportunity.
Amy Raskin.
Regeneron, stock's been cut in half on ILEA concerns. They have lots of shots on goal. We like it a lot here.
Okay, Farmer Jim.
Cisco Systems, they reported 2 weeks ago, and there was a bout of profit taking. Now it's clawing back, and it's pretty close to a 52-week high.
Okay, thank you very much for that. And speaking of the financials, we just told you trading at a record high. Truist. Steph?
I still like the banks very much, inclined to buy given the steep yield curve, especially the regionals.
All right, good stuff. Great weekend. Long one, everybody. I'll see you on the bell.
Hey, I'm George. It's Blue Cloud Trading, and it's Friday, August 29th. The market is about to close. It has not closed quite yet. 3:52 p.m. Eastern Time. As you can see right there, the Dow down 0.29%. NASDAQ is down 1.21%. Which seems to have stabilized since 10 a.m. You can see that it's staying above that level there. S&P 500 dropped, and that also has stabilized. It's down 0.72. And the Russell 2000 down 0.50%. Same situation there. In fact, it seems like it's bouncing a little bit. In this video, we're going to take a look at the heat map. I'll show you guys this right here. We're going to analyze that in a few seconds. I'll take a look at the daily and weekly performance for some of the top stocks. You can see Nvidia was down 3.54% today. A lot of the semiconductors got hit. So we'll look at that. We'll also take a look at the stocks that a number of stocks, not all of them. And Nvidia and some of the other stocks that are that have been and might still be, but the only way to find out is to become a member, will be covered in the video that I do this weekend. I do a members only video, so consider becoming a member. So we're going to take a look at the technicals using the Ichimoku indicator. We're going to look at the index ETFs that you see right here on the left. We're going to look at some of the stocks that were discussed on the show, about 15 of those stocks. There's the list right there. We'll take a look at some of the Mag 7 stocks like Tesla, Apple, and Meta. Like I said, I'll be covering Nvidia in the members only video this weekend. Consider becoming a member. There'll be some information on how you can become a member at the end of this video. And then some of the strongest sectors. Okay, we'll take a look at those. Oh, and of course, we've got some member requests. So we'll look at Berkshire, Palo Alto. No, that's not Palo. Yeah, that's Palo Alto. I thought it was. JSML and ETH, Ethereum ETF. So first, let's take a look at the market. The S&P 500, you can see that the majority of the semiconductors were down today, right? A lot of the semiconductors were down. Some of the industrials were down, like farm and the farm and heavy materials there. We had healthcare up quite a bit. Financials were up. Consumer defensives were up. Tesla down 3.44. Oracle down 6.03%. CrowdStrike was down 4%. So yeah, very interesting. Let's look at the 1 week performance since it is the end of the week. All right, so as you can see here, Nvidia down just 2.24% for the week. Google up 3.28, Apple up 1.9. Like I said, everything is still moving. It's 3:58 p.m. now. Energy stocks very bullish for the week. Let's take a look at the sectors. And for the 1 day performance, you can see, like I mentioned, consumer defensives were the top sector today, and technology was the worst. But for the 1 week performance, it was energy at the top, utilities at the bottom. 1 month, basic materials at the top, and utilities at the bottom there. And there's 3 month performance for technology, up 14.07%. All right, let's go ahead now and start looking at these index ETFs. We'll start off with those first. We'll run through these. We don't need to spend too much time. As you all know, the Ichimoku indicator is very useful in helping us identify the strength of the trends. As long as price is above the moving averages, there's the price. As long as it's above the Tengen-sen, the 9 period, the 26, and the Ichimoku cloud, and above the 200, that's pretty bullish territory to be in. Yes, we dropped, and we're down 0.65 right now, 0.63 as it's changing. Right before the close, here's the timer. It looks like we've got 2 seconds left. Oh, boom, 4 p.m. There's the close. Very exciting. Here's the QQQ ETF. I had a very profitable week, by the way, in the stocks that I closed out of this week. That's another thing that I talk about in the member-only video that I do. So it's usually about an hour-long video. You guys should consider becoming members. But in order to watch it, you have to become a Blue Cloud Trader or Blue Cloud Legend level member. Anyway, here's the QQQ ETF down 1.18, but notice where it stalled, right at the moving averages. So there's a good chance on Monday we might get a bounce here. All right, it's still in a very strong level of support. Last time we actually dropped under the Kijun-sen, that happened back here and over here, and then we saw a little bounce again. So overall, this is still a very strong trend. Here's the weekly chart. Okay, still above the moving averages on the Qs and on the SPY. Here's the Dow Jones DIA ETF on the weekly chart. You can see it's still holding up above that 451.34 level from that prior high there. Here it is on the daily chart. Still looking bullish, just down 0.14. Russell 2000 down 0.42%, the IWM ETF, and you can see that also on the daily chart, still very bullish, right? Here it is on the weekly. Everything started to become bullish on this particular day here. The big candle that you see, the bullish candle on Friday, August 22nd, and that led to this move up. but it looks like it's almost around the same level, right? So like it's about the same level as it was last Friday. Here's the VIX spiking up a little bit, 6.72, but it's not anything major yet. As you can see that we're still at a level of 15.39. We're still under the cloud. We don't want to see this getting above the cloud. That's when the things start to get a little bit wild and crazy like it did back in April, as I've mentioned before, you know, and then you see the price of the entire markets sometimes drop as a result. This represents volatility. It represents fear in the markets. We don't have that yet. There needs to be a catalyst for that. We don't have it. FEZ, the Euro Stocks 50 ETF, down 0.65%, finding some support above the cloud, but it is under the 9 period. Okay, so now we'll take a look at the stocks that they talked about on CNBC on the halftime report earlier today. Like I said, I'm covering about 15, not all of them, but we're going to cover 15 stocks. And guess what? Only three, the top three there, the ones that have a blue flag, passed the test of Ichimoku on both the weekly time frame and the daily. Okay, what I'm essentially looking for is our stocks that are looking bullish on both time frames. And Snowflake, as you can see here on the weekly, is looking pretty bullish, even though it was down 0.96% today. Here's a daily chart. You see it dropped a little bit. After the earnings announcement, it had a big pop. And it actually, you know, here we were on Wednesday, on Thursday, basically, it gapped up and moved, you know, quite a bit. It actually moved up about, that was about a 13.6% move right there. And then it dropped a little bit. You can see that it gapped down, and we're pretty close to the prior day's close. We're not that far away from it. WYNN, Wynn Resorts. This was Farmer Jim's, one of Farmer Jim's stocks. Now this one here has, in fact, is also looking pretty bullish. Here's the weekly chart. Okay, we broke through this at 117.86 level based on that prior high. And I think Farmer Jim mentioned that he closed half of his position. If you look at the daily chart, I think that's a wise choice because, as you can see here, price is quite a far distance from the moving averages, what I call the equilibrium zone. And so when you get that far away and you get a reversal candle, it's not a bad idea to exit positions. I'm not sure that's the reason he closed half of his position, but, you know, nonetheless, not a bad idea to take some profits. So yeah, I think this still has some potential, but it might pull back over the coming days and then maybe find some support before taking off again. Then you got TFC, Truist Financial Corporation. We've got a reversal candle here. This is called the Gravestone Doji. That one right there. Let me show you guys what that looks like on this cheat sheet that I have. Okay, this is it. So it's a bearish single candle pattern. After a move up, you get that long wick and a kind of a flat body at the bottom. That's kind of what we have right there. It's not a super long wick, but it does look like that gravestone type styled candle, which is a reversal candle. So that wouldn't be surprised to see this dropping a little bit. It was up 0.13% today. Here's the weekly chart, looking pretty bullish. So Stephanie Link, I guess, had this stock back on May 20th. She also recommended it back in October 18th. So this one looks pretty bullish. I like this one too. The rest of these, not so great. We don't really need to spend too much time on them. Here's Marvell Technology. As you can see, here it is on the weekly chart under the cloud. Okay, under the 200. Bearish territory. On the daily chart, today, down 18.61% for Marvell. All right, not good. The fact that it gapped down like that. And the next earnings will be on December 2nd. So this one got hit hard. And so, yeah, not a stock that I would be thinking about adding a position to here, okay? VRT, Vertiv Holdings, is holding up above the Ichimoku cloud on the daily, on the weekly chart too, but it's under the moving averages, so no on that one. ETN, which is Eaton Corporation in the industrial sector, that's under the 9-period moving average. On the weekly chart and on the daily chart, it's inside the cloud, so no on that. IGV is inside the cloud, no on that. So remember, you want price to be above the moving averages. You want it price to be above the cloud. You want that white line there, the Chiku span, which is the closing price projected 26 periods ago. to be above price. It's not. Therefore, it's starting to look pretty bearish. Another negative thing I'm noticing here is the fact that the Tenkan, the 9 period, crossed under the red line, the 26. That's also bearish. Okay, when you have the faster moving average crossing under the slower one. How about the cloud itself? Let's look into the future. Oh, look at there. It looks like a bearish cloud to me. You got the Senko span A, okay, under the Senko span B. The light colored blue line there is under the purple line. That's not good either. So on the daily, it's starting to look a little bearish. It's got some support still. It's got the bottom of the cloud. It's got the 200-day. And so there's a good chance that we might see something happening soon. But right now, I would not be adding a new position. That's all that means. And if you look at the weekly chart, like I said, we're still over the cloud. The cloud is actually bullish here, but we're under the 9 period. So that's not a good time to add. MDB, MongoDB Inc. It had a big day. Big week. As you can see, it moved up approximately, 44.12% this week. All right, that's a huge move. Look at the daily chart. So basically, there's the daily, and we can see what happened here. It looks like it happened probably after earnings. This was on Tuesday, August 26th, and it jumped. It took out these highs right here on the daily chart. Okay. So now, this has been in an uptrend, as you can see anyway, but the fact that it took out these highs is really important. It also took out these highs, these prior highs back here. Those go back to February 20th, 2025. And where's it most likely to find resistance? Well, we can switch it over to a weekly chart. It's already finding resistance inside the cloud, but it's also going to probably find some resistance at the high there, this prior candle, which is $370. So that's a level that I would watch. If it does end up getting through the cloud there, you want to wait to see what happens. How far is that? It's about another 15, almost 15%, 14.5% away. But I would not be adding here based on the fact that it's inside the cloud. CRM, Salesforce is under the Ichimoku cloud. No on CRM. ServiceNow is under the cloud. Okay, it's struggling, but it is finding support at the Kijinsen, the 26 period. So that's the weekly chart. Here's the daily under the cloud. Adobe under the Ichimoku cloud on the daily. What about the weekly? Same thing. So stay out of that one, folks. That's obviously in the downtrend. One of our members asked about, can Ichimoku be used to help us identify shorting opportunities? Absolutely. But just remember, there's unlimited loss to the downside. You can lose more than 100% of your position. Well, let's say that you put in, I don't know, hypothetically, $1,000. If you were to go long, the most you could lose is $1,000 on the stock. If you're shorting, you can have losses more than 100%. All right, that's the scary part about shorting. So you have to be really careful when shorting. And I would probably only short if I was considering like day trading, for example, or it's a short-term type swing type trade. Maybe in that situation, this, for example, would have been a good opportunity to start shorting back here when see that big red candle that closed under the Ichimoku and it got under the 200. It also broke through that low. So from that point, it's already dropped 22.92%. Then you can manage the trade on a daily chart, for example. But you can see even if you just use the weekly chart, how many times price would start to move up. All right, but then all these levels of resistance above kept it from breaking through. And as here's another thing you'll notice is once it broke through that level, it was unable to come back above it, right? It found that resistance at this level, dropped, creating a lower low from the prior one. Then we had a lower high here from this high. And right now, actually, Adobe does look like it's finding, this is a potential double bottom, but there's not enough information here to conclusively say that, all right? But it did stall here at this level. The low is, what is the low? The low is $332, okay? So around $332, it stalled. it started to bounce. We had a bullish engulfing pattern that occurred right here, and then it moved up a little bit more. But now we have another reversal candle because we're like still under the Kijun-sen, and this is bearish territory. And so anytime that you're considering going long in this scenario, you're really taking a big risk because you don't have a lot of backing from other players out there. Because guess what? People aren't buying this. This is out of favor right now. No one's interested currently in adding positions or big positions, because if they were, this stock would be moving in an uptrend. It's in a downtrend, and it's downward, that downward channel that you see there. The fundamentals can be great. Profit margins are 30.39% positive. It's look at the capitalization is a $150.9 billion company. The price of sales is a little high at 7.86. Sales growth rate is not terrible. It's 12.14%. Even operating cash flow is positive. But again, there's no correlation between the performance or earnings necessarily of a company and whether it's going to go up or down. Unfortunately, that's why I use technical analysis, because you want there to be a confluence. You want both the fundamentals to be bullish and the technicals to be bullish, and then you've got something potentially. All right, let's keep going. DECK. Here's another one that dropped like a rock. Okay, it reached this level here, the high of around 225, and it's down to 119 right now. But what's happening? It's finding support at the 200 multiple times here, multiple weeks, and bouncing. So this also has potential, but I still would not be adding a position here. You can see it almost kind of looks like a little bit of a symmetrical triangle pattern right there. Maybe if it breaks through that level, possibly you'll have something, but it's still under the Ichimoku cloud on the weekly. And if we look at the daily chart, yeah, it's starting to emerge out of the cloud on the daily. So remember, you also have to determine what time frames you want to trade as a trader. Do you want to trade based on the weekly? If you don't have the time to be looking daily at your stocks, this might be your best option. And then try to use the daily for a more optimal entry when you decide that you want to go long. Okay. If you want to be more active, maybe use the daily and a 2-hour. But it's always a good idea to use 2 time frames for confirmation. gap inside the cloud under the 200. See how it's finding resistance at that 200 day? That's the dotted yellow line right there. 3 weeks in a row. 3 days in a row. On the weekly chart, we're still under the cloud. So no. Regeneron, no on that one. Let's take a look, and here's the daily chart for you. It has emerged, but it's under the 200. Cisco, okay. We've got price starting to show a little bit of strength here since August 18th. It's moved up a little bit. It's moved up about 4.9%. But again, the moving averages are not in order. You get the faster one under the slower one, and the cloud has turned bearish. Senko Span A is under Senko Span B. You can see that right there. But the Chikou Span is still above price. How about the weekly chart? Yeah, so it looks like it's stalled right at the 9 period. I'd hold off for now on Cisco. All right, let's look at Tesla. Inside the cloud still, right, on the weekly chart. So it came up, touched the top of the cloud. In fact, it pierced it slightly and then dropped right back in. Here's the daily chart showing that. So, yeah, interesting. Down 3.50%. Here's Apple on the daily chart, down 0.18%, above the moving averages, above the cloud, but on the weekly chart, also stalling. Multiple weeks, 3 weeks in a row right there, okay? No on Apple, it's inside the cloud. Meta dropped under the Tenkan-sen on the weekly chart. It closed Friday, okay? That's not a good sign. More than likely to pull back some more. On the daily chart, also, same thing under the moving averages. So I would not be surprised to see Meta start to drop a little bit and maybe another 3.5% before it finds support right at the cloud. The directional movement index here has also turned kind of a little bit bearish. You can see that the negative DI line is moving up. The positive DI line is moving down. And the white line, which represents the ADX9, is starting to edge up a little bit right there, which means that the momentum to the downside is increasing. All right, let's take a look at the strongest sectors very quickly. And then we'll take a look at the member requests. Okay, so let's see, out of 23, there's 11 that look pretty strong. XLB ETF, which is for materials, up 0.14%, looks bullish on the daily and on the weekly. Silver, SLV, also looking very bullish here. Probably wish I held my position a little longer. But yeah, it's been moving up nicely here on the weekly and on the daily chart. It also looks like it broke through that high. So that's a really good sign for silver. I think silver next week is going to be really taking off. GDXJ, Junior Gold Miners ETF, also on a run, as I mentioned in the previous video. You know, this one's looking good on the daily and on the weekly. And so you can see how Ichimoku can help you with your trading. COPX, Copper Miners ETF, is looking pretty good here. Yeah, broke through this prior high. That happened today. I'm sorry, this week. So these are weekly levels that have been broken. Okay, so that's very bullish. We can see on the weekly chart the ADX is moving up, negative DI is moving down, positive DI is moving up. That's what you want to see. And on the daily chart, it's going to look the same, right? Very bullish. GDX, which is the Gold Miners ETF, is also looking the same as GDXJ. Very bullish. XLC, Communication Services, looks good on the weekly chart. On the daily chart, it was down 0.2, but as you can see, it's holding up above the moving averages in the cloud. Real estate started to show some strength today, up 0.55%. It got back into the good graces of Ichimoku. And so that is positive right there. It's still above the 200, above the cloud on the daily. And if you look at the only thing that I'm not seeing that's positive here is the Chiku span. It's not there yet. So see that white line there? Still under price. Okay. So maybe it needs a little bit more time to materialize. But if you look at the weekly chart, technically above the cloud as well. Okay. And the Ichimoku is starting to turn bullish, but it's like really kind of flat. You know, you want to see a little bit more confirmation, in my opinion. XLY on the weekly looks good, and on the daily, even though it was down 1.03, that's consumer discretionary. Gold looking good. I like it, up 0.96%. It looks, did it stall at that level? Let's find out. Let's get the exact dollar amount. Let me move this out of the way. Let's get rid of that box. And let's take a look and see what the high is. It looks to me like the high here is 317.60. Okay. Let's hit that. Boom. And guess what? We broke it at 318.05. So there it is. You can see it emerging through. The other thing I like about gold right now, the volume is increasing. I've got some gold positions in stocks, individual stocks that have been doing really well. ADX is moving up, positive DI is moving up, negative DI is moving down. So this is not a bad place, right? Especially if we see a continuation to the downside with technology stocks, right? Today was not a good day, obviously. Here's XLK, for example. So I just want to show you guys the comparison of GLD versus XLK real quick. Down 1.53. Tenkan-sen is under Kijun-sen right now on the daily. High volume bar. So here's a weekly chart. I mean, it has not broken down yet, but it's starting to show some signs of weakness. The last time that the Tenkan-sen was under the Kijun-sen, all right, the 9 period is under the 26, you'd have to go all the way back to April 22nd of 2025. Once we had the crossover, it led to a nice move up of about 31% for technology. All right, so just be cautious, be ready for something that might potentially happen. I'm not saying it's going to, but financials, on the other hand, looks pretty good on the daily. Very strong. Uptrend. It's got some space here between the two moving averages. I like it. ADX is moving straight up. That's what you want to see on the daily, and on the weekly chart, same thing. IJJ. By the way, guys, I also do a more thorough analysis of the sectors. You know, remember, XLF is just about 70 stocks in here. The sectors that I analyze over the weekend are more vast. They have hundreds of stocks in the financial sector. And so it's a little bit more thorough and it's better, I think, the analysis of the sectors. But yeah, we're covering these because these are tradable. You know, a lot of people trade these ETFs. IJJ is the mid cap 400. That one's above the cloud on the weekly chart and on the daily. So that looks pretty good, even though it was down 0.31. All right. And then our members' requests very quickly. JSML on the weekly chart. All right. So here's the thing with JSML. It's the Janus Henderson Small Cap Growth Alpha ETF. Okay. Let's look at the high here. You can see that it's coming close to this high of 74.37. And the problem there is, like, if it does, you know, come up a little bit more and then you start seeing more reversal candles similar to this one, it could potentially drop, creating a double top pattern. You can see the last time that we came to that level was back here. So it's a very important level, that 74.37 that I'm talking about. Do you see it back here? Do you know how long ago that was? That was around 2021, February 19th. And then what happened? It reached that level and then boom, dropped and then dropped some more, right? So it stayed at these levels. So if you were holding this from this point, you'd be coming around the same level now, how many years later, right? So that's why technical analysis is important. We're talking about 2021 versus 2025. We're around the same levels. If it can break through the 74.37 though, which is very possible, right? Small caps and mid cap stocks, if the Fed continues to cut rates, these types of stocks will do well. They'll flourish in that environment. We'll see that happening, but be concerned about this weekly. I'm a little bit concerned about that long wick there. If you look at the daily chart, it pulled back. In fact, ooh, this is a fun little. I like this pattern here. It's a 3 candle pattern called Abandoned Baby. So you see this candle right here. I'm going to show you guys that on the cheat sheet in a second here. And then you got that little candle, so it gaps up, as you can see there, right? Leaving the tiny little candle up there by itself, Abandoned Baby. All right. And then you've got this candle dropping. Okay. And so that's not a good sign. That's bearish. Let me show you guys that pattern. We got to go to triple candle patterns. The bearish Abandoned Baby. Ooh, what a cool name. Japanese are interesting. So here's the big bullish candle. Gaps up, leaving the little baby up here, and then it gaps down and then drops. Okay. So that's what we've got. And that is a, yeah, look at these other ones, like the 3 black crows, right? You've got the evening doji star. You've got the evening star. But what we're seeing is the bearish Abandoned Baby because it gapped up and then gapped down. And that's what we've got right here. We had that gap up and the gap down. So that's more than likely to drop some more. The cool thing is, I mean, the good news is you're still above the Tengen-sen, you're still above the Kijun-sen. Maybe it will just drop a little bit, you know, but I would certainly not be adding positions. That's where the candlesticks come in handy. It can help you at least recognize when you should not be adding new positions. Okay. And so you're waiting for a bullish candle typically, and you want price to be above the Tengen-sen before adding new positions. Okay. And here's the weekly chart. All right, PANW, Palo Alto Network. Member asked if Ichimoku, this is the member that asked me if Ichimoku can be used for shorting a stock. Yes, it can. Would I be shorting this one, though? No. And the reason I wouldn't be is because on the weekly chart, now, I think he brought this up because he was probably looking at the daily chart. And if you look at the daily chart, it does look very weak here. In fact, it looks like a place where price probably next week might drop. It's possible if you're looking at the daily chart, just the daily chart. Why? Because as you can see, there's some weakness here, right? We broke through this low. All right. We broke through this low here. Price had gapped down, creating a lower low here from this low. And it's likely, as you can see, it's stalled right there on the daily chart at the cloud. So we might see it pull back further. But then if you look at the directional movement index, it gives us another picture. which is concerning if you're thinking about shorting. So I would not be shorting this. You can see the ADX is moving up and the positive DI is moving up and the negative DI is moving down. This is bullish. But the cloud itself is just keeping it in check, right? So yes, the Chiku span is under price. Yes, the future cloud as well is under the technically under the Senko span B. The Senko span A is under Senko span B, but it's moving up. Looks like it's going to cross over. So all you need is one bullish day, and it can break right through that very thin cloud. The thinner the cloud is, the easier it is for price to break through it, folks. That's another thing to keep in mind, right? Look at the cloud. Sometimes there's no cloud at all. It's just a line. So like if price was right here, for example, it could easily surpass and break through. But the cloud itself, the thickness of the cloud helps to either make it stronger level of support if price is above it, like over here. And then if it's a thicker cloud and price is underneath, it's more than likely to drop. But in this case, I think it's going to actually move up. And if you look at the weekly chart, it broke through the cloud this week. All right. And we've got a bullish cloud. So no, I would not be recommending shorting this one. Berkshire Hathaway, BRKB, on the weekly chart is above the Kijinsen, but the faster moving average is under the slower one on the weekly. And the Senko span A is under Senko span B. So no. And on the daily, it does look bullish. So if you're trying to trade this one, but look, we've got a shooting star, a bearish reversal candle. Even though everything looks bullish here, this could lead to a potential pullback, right? And again, the weekly chart is not 100% looking that great. Much better opportunities with the stocks that I shared last weekend, the 20 stock ideas. And this weekend, I'll be coming out with 20 more new stock ideas in the members only video. So definitely look out for that tomorrow. ETH, Ethereum, guys, we haven't talked about this for a little bit, but it's been showing some strength. As you can see on the weekly chart, we've got a bullish cloud here on the weekly. We've got price above the moving averages, and we've got Chiku span above price. However, to this week, it was down 2.29 on Friday. We've got a bearish harami. There's another fun candlestick pattern. Those two candles right there. It's when you have a large bullish candle followed by a small red candle, and that means pregnant. There's the mom and the little baby. Okay, easy to remember. This is a bearish pattern. It's more than likely to pull back. Let me show you guys that on the cheat sheet. Remember, you guys can get this cheat sheet for free on my Twitter account. There's links on my YouTube homepage. So look for the Twitter, x.com. I'm under @BlueCloudTrader on X. So let's look at that. It's actually a bearish harami. So there it is, right there. Bullish candle followed by the small red candle. All right, that's what we've got here. So I think that's going to drop potentially next week. Here it is for a couple of days, Thursday and Friday, under the Tengen-sen. I don't know. Maybe it will bounce off that Kijinsen. There's a lot of interest in ETH recently in comparison to the IBIT, which is the Bitcoin ETF, which is, as you can see, it's under the cloud currently. As of Friday, down 3.37%. ADX is moving up, and the negative DI is above positive DI. That's the daily, and here's a weekly chart under the Tengen-sen. Doesn't mean that this thing is over, this run for Bitcoin, but we might have a short-term pullback here, and it might even come down to the Kijinsen, which is another maybe 7% drop, 7.5%. This is a very like Ethereum. Okay, you're gonna have big moves. It's very volatile. The beta is 2.5 there for IBIT, and it's 4.47 for ETH. What that means essentially is, if it's a 4, if it was just 4.0, that means it moves around 4 times the typical movement of the S&P 500. So if the S&P 500 on average moves, say, 1% per day, this would, if at 4.47, moves 4.47 times that. All right, so it can be a lot more volatile. All right, that was a long video there. Hope you guys enjoyed the video. Stay tuned on how you can become members. Don't forget to like and subscribe. Okay, hit the notification bell. And yeah, stay tuned for the pre-recorded video on how to become a member.